Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. All right, let's start off this week by looking at the markets. So SPY had a pretty wild and volatile week last week, and just the week before that as well had a very wide price range week and pretty volatile week as well. And so if you see on the weekly time frame here, we generally have a pretty similar price range here, although last week we made a new high pivot point, which was clocked in at 417.62, which is exactly 90 cents over the previous pivot high point at 416.72. So nearly $1 difference there. So we have definitely made a higher high, which confirms that we are in a longer term uptrend based on this weekly time frame. However, we have been stuck in the same price range as we saw back in April of 2022 and even March of 2022 and also back in mid-June of 2021. So we are in a nice consolidation gridlock. Now, based on that long-term perspective, if you go back on the daily time frame, things are looking pretty bullish. Number one, because we have made a micro double bottom. Now, why is it a micro double bottom? Well, because these two bottoms here, the left one and the right one, are only separated by 1, 2, 3, 4, 5 trading days. However, there are two concerns of my perspective of being bullish into this week. Number one, we have this descending level of resistance that is just forming right now as we had just retested this descending level of resistance after popping over this daily horizontal level of resistance at 413.50 on Friday. So if you take a closer look on the 2-hour time frame, okay, we rejected and we closed below this descending level of resistance for a second time on Friday. Where was the first time? Well, when we made that high pivot point at 417.62. And I believe this is a error here by TradingView. I should say 417.62, but you know what? It's only 1 cent difference. It's not going to make a huge difference to where we want to see or what we want to see in the near-term future. So this rejection here has to be looked upon as a very cautionary warning sign for the near-term future, especially this week, as this week is filled with major catalysts like CPI, PPI reports, and several Fed members speaking as well. And make sure you guys are reading the newsletter first before you guys watch this TA or technical analysis video. Now, the second and last kind of warnings for a bullish perspective into this week is this gap up that we had between Thursday and Friday. So after we made that massive gap up from Thursday's close, which resulted in us nearly closing at 2% on the day on Friday, we didn't even attempt to fill in this gap. So if we decide to continue to reject this descending level of resistance, we can come straight back down, break below this intraday level of support at 410.20, come all the way back down, break below 409, and eventually fill in this gap, or at least start to fill in this gap, which could also send us straight back down to the major level of support at 406, which I would hope we can find ample amount of support and buying. But if that does not happen, we can come all the way back down to the pivot areas that we saw in the first and second bottom of this micro double bottom, or if you guys just want to use a whole number level at 404, and that will create a triple bottom. Now that tends to be a bullish chart pattern as well. However, we are retesting a significant support level for a third time. So that means that buyers aren't strong enough to have the price move away from the support level. So if we use the third touch rule, that's going to tell us that there is a possibility of sellers coming in strong at the third retest to make sure that we break below 404 and dive lower. And if that happens, well, we have two gap ups that we have never filled in. Okay, so we have filled in this very, very small micro gap up here thanks to the move down that we saw 2 weeks ago and the move down that we saw last week. So again, we had these two gap ups here that we need to still fill in. So if we do decide to retest 404 and break below 404, we are definitely making a beeline towards this $400 psychological level and eventually fill in this last gap up that we've never filled in. All right, so with that perspective in mind, again, I am bullish into this week. Okay, so make sure you guys remember this 413.50 level, because this resistance level has been retested on Friday, last Wednesday, and multiple times in the past over here, like on this candlestick, and this candlestick. Okay, so it's used as a level of resistance multiple times. So if you're able to break over 413.50, there is a good chance that we can break over 415.50 again and possibly have us come right back towards 420. All right, so again, 413.50 has been a major level of resistance even back in early to mid February, where we saw this choppy zone forming. All right, so again, we are stuck in a very, very large choppy range zone that we still have not broken out of. We attempted it once when we made this new pivot high point, but we ended up coming right back into it. All right, let's take a look at the Qs. So QQQ is obviously looking a lot better due to the fact that, well, everyone should know by now that the tech sector has been extremely strong relative to the overall markets. So on Friday, we were able to completely take back all the losses that were made between Tuesday and Thursday of last week in just one single trading day. And we saw this with increased volume as well, which tells us that buyers are ready to move this up higher, right? I mean, it's a very, very simple observation. And so thanks to this consolidation that we've been seeing since the month of April, we've created a nice textbook base or even a bull flag where we see this breakout back in mid-March as our flagpole, and then this sideways consolidation between 312 or 313 if you guys want to round up and 321.50 as the flag. So this can be seen as a nice textbook bull flag. Now what's concerning about this one for this week is that again we have a very pivotal week, a very important week full of catalysts. And so based on what we see here on the 2-hour time frame, we could possibly be seeing a double top right at 323.50. All right, so we have the first top over here and then the second top right over here on Friday's price action. And if we do reject from 323.50, we can come all the way back down to retest 321.50 as a new level of support again, as we saw on Friday on this 2-hour candlestick, and possibly hold it so that we can allow the 2-hour 10 and 21 SMA to catch up. And if that does happen, we can see the 10 SMA crossing over the 21, creating an intraday bullish crossover. And that can completely negate the bearish crossover that we had back in Wednesday of last week. Okay, so this is when the 10 SMA crossed below the 21 SMA. So you want the complete opposite to happen where we have a bullish crossover when the 10 SMA crosses over the 21 SMA. All right, so those are the two levels that we need to be watching out for. But again, if we see the overall markets completely crushed lower, QQQ can follow along with it, even if it has the overall relative strength in the entire market right now. And if that does happen, QQQ can also come right back down to this consolidation or chop zone between 313 and 321.50. And it can take weeks or even months before we can see a nice breakout. But let's hope that the momentum is still alive in the tech sector and we can break over this 323.50 resistance level without possibly confirming a double top chart pattern. And if we're able to break over 323.50, my long-term profit target is still at 330. Okay, so with that in mind, let's take a look at our first name, CRM or Salesforce. So this one has been on a rampage to the upside. And I love the fact that CRM has also had a double bottom chart pattern at 190.50. However, just like on SPY with the double bottom, we're also forming a nice descending level of resistance. Now in this case here, we've also created a nice ascending level of support. So with this descending level of resistance plus ascending level of support, we are forming a nice wedge chart pattern or an overall nice bull flag after we saw that breakout in mid-January. And so we have this nice flagpole here. And then we have our wedge, which is our flag. And we add that up together to create a nice bull flag. Now, if you go down to the 2-hour intraday time frame, okay, this looks a lot stronger compared to SPY because we've had our third retest on Friday at this descending level of resistance. However, if we are making it a intraday wedge chart pattern, there's still a possibility, okay, that we can be seeing consolidation like this. Why? Well, because the price loves to tighten up before it makes a clear breakout. But again, a wedge chart pattern is a neutral chart pattern, which means that we can break to the upside and break to the downside, right? So it all depends on whether or not the sellers are stronger or the buyers are stronger. And in this case, we could possibly be seeing buyers coming in strong because we have created this nice double bottom within this nice macro wedge chart pattern. So again, I fully expect us to break to the upside, which is the reason why I gave you guys a long-term entry over $200. And why 200? Well, I want us to completely avoid this possibility of us constantly consolidating between these two trend lines before we break out. All right. So I want us to have a nice third retest at $200. So if we go on the daily time frame, we've only retested 200 twice. So this kind of looks like a situation that we had on the Qs, right? When we had our two retests, and I also indicated that I want to see a third retest at 321.50. And guess what? We got that last week on Monday, and even last week when we had our first breakout over 321.50 on Friday of 2 weeks ago. So with CRM, I want the same thing to happen where we can retest 200 for a third time. But that means that we have to break out of this wedge chart pattern to the upside, or overall break to the upside on this bull flag chart pattern. Okay, so our second name here is Google. So Google, again, we have to be looking at this one. because of how tight this one is getting. So last week, we're able to see the 50 SMA finally crossing over the 200 SMA, creating what we call a golden cross. So this is a complete shift in the long-term perspective from being very bearish to now overall being very bullish. So with the 50 and the crossing over the 200 SMA on the daily time frame, that solidifies a bullish long-term perspective. But how about the short-term perspective? Because we've been very, very tight and in a very nice consolidation range between 103.50 to 108. And at the same time, we have been creating this descending level of resistance, just like we saw on SPY and on CRM. So this descending level of resistance can extend as long as it wants if the price continues to move up, reject, move up, and then reject again. But if you want to avoid this, okay, we can simply look for an entry point over 108, or if you guys want to see an actual confirmation of the price staying over this 108 level, you can look for an entry over this whole number level of 108.50. All right, so I gave you guys these two entry points so that we can avoid the possible headaches of a potential rejection at this descending level of resistance, and then a potential bounce at an intraday or daily level of support, and then another rejection at this descending level of resistance, and so on and so on and so on. All right, so this also kind of looks like CRM. Okay, so our third name here is Sentinel. All right, so Sentinel-1 or S looks absolutely amazing because on Friday we're able to retake and reclaim the 10 SMA, while on the same day we were able to retest the 21 SMA as well, this light blue line. And obviously we weren't able to close over the 21 SMA, but this tells me that there is a lot of potential for a short squeeze like move to the upside. I love the fact that we quickly bounced at 16 and moved all the way up to nearly $17, and we were almost ready to retest this major level of resistance at 17.40, or specifically $17.35. So if we're able to break over 17.35, we can see a long entry point at 17.40 as confirmation. And we saw that already once in the past here, back in early to mid-April. However, there was a lot of resistance because this one has been pounded by short sellers for 2 years. Okay, so there's a lot of overhead supply that needs to clear, which is the reason why this name has been basing since late November of last year. So with this multi-month base, we can slowly accumulate buyers to the point where we can start pushing out any sellers residing in these major supply zones or areas. Now, my major concern is that we can break out of 17.40, but lose the momentum maybe somewhere around $18 and possibly create a second lower pivot high point. And where's the first one? Well, right over here, $19 flat. So somewhere around maybe 18 or even 18.50 if we're being optimistic, okay, we can see a rejection and possibly forming a descending level of resistance, just like we've seen on the past two names on Google and CRM. Okay, now the only reason why I'm saying that this is a possibility is that, again, number one, we have a heavy supply area overhead, and then number two, this looming daily 200 SMA that is slowly curling downward to finally retest with the price, especially after not even retesting with the price once after its formation. Okay, so as long as we're able to continue to consolidate near this daily 200 SMA, okay, we can see a possible breakout over this previous high pivot point and possibly retest and reclaim this 200 SMA on the daily time frame, which will give us a nice lift all the way up back to the 20s. All right, our last name here is Baba or Alibaba. Now, this one's going to be a very tricky one, simply because it's a Chinese stock where it can be very, very volatile from trading day to trading day, as it can have very nice gap ups and gap downs. So this one's going to be a tricky one to play with. Now, the number one reason why I'm looking at this one for this week is that we can see a potential double bottom, just like we saw on Google, or excuse me, on SPY and CRM. Okay, so with BABA, okay, we have a double bottom, just like we saw on CRM, and SPY, double bottom. So with BABA here though, there is obviously a bigger potential double bottom at play, since the first and the second bottom are separated by 1, 2, 3, 4, 5 weeks. 5 trading weeks compared to SPY's 5 trading days, right? So this is the opportunity that I'm looking for, because if this is a true double bottom, we can potentially see weeks of a run up. And so if you go back on the daily time frame, okay, we can see a potential break over $84, which is our confirmed entry price. And why 84? Well, if we're over 84, then that means we're also going to be over the daily 10 SMA. And what tends to happen when we stay over and we use the 10 SMA as a new level of support? Well, we tend to rapidly rise to retest the next major level of SMA, which is my 21 SMA. And so wherever the 21 SMA is at, which I predict that it could be possibly at 88 by the time we reach the 21 SMA, we can see a retest of the 21 and then a potential rejection. And once that happens, we can see another retest of the daily 10 SMA before we break over the 21 and possibly head right back over to the 90s. Now that sounds very, very nice and optimistic, but we cannot ignore the fact that the daily 50 SMA has crossed below the daily 200 SMA. And what does that mean? Well, we have created a death cross. That means the long-term perspective has now shifted from being bullish to bearish, right? And so that is going to be a huge problem for any type of a bullish momentum to the upside, okay? Now, obviously, I'm going to stay optimistic just solely based on the fact that we could be seeing a nice double bottom. And again, the first bottom, if this is a double bottom, has created a very, very large bounce to the upside until we even reached past that triple digit number of $100. So again, just based on this weekly perspective, on this weekly time frame, if we are intending to create a double bottom, I expect the price to go all the way back to at least retest $100. This magical triple digit number. All right, so make sure you guys are watching this one intensely, because we need to see a break over $84 and hold this $84 and over this daily 10 SMA in order for us to at least reach 86 and eventually hit my major level of resistance at $88. And hopefully I can see the 21 SMA resting at this level by then. All right, that is it for this video. If this TA video was insightful, make sure you guys leave a like down below. And if you aren't subscribed yet, make sure you guys hit that subscribe button and hit that notification bell to know when I am live or when I have uploaded a new video. Good luck, and I'll see you all tomorrow morning.